What do billionaires do when the economy starts falling apart? When markets crash, inflation rises, and millions of investors panic, the world's wealthiest people often see something completely different. An opportunity. While ordinary investors may rush to sell everything during a crisis, billionaires tend to think in decades, not days. So, how exactly do they invest when the economy is in trouble? The first strategy is simple: cash and liquidity. During uncertain times, billionaires often keep a significant portion of their wealth in liquid assets. This gives them something most investors don't have during a crash: the ability to act. When quality companies suddenly become cheaper, having cash available can allow wealthy investors to buy while everyone else is selling. The second strategy is buying high-quality businesses at discounted prices. Economic crises can push even strong companies' stock prices lower. Billionaire investors often focus on businesses with strong brands, loyal customers, healthy balance sheets, and long-term growth potential. The idea isn't to predict the exact bottom of the market. It's to buy valuable assets when fear has pushed their prices below their long-term potential. The third strategy is real estate. During economic downturns, distressed properties and businesses can sometimes become available at attractive prices. Large investors may look at commercial buildings, luxury properties, farmland, or other real assets that can generate income and potentially increase in value over time. But billionaires don't simply buy everything. They diversify. Their portfolios may include stocks, private companies, real estate, private equity, bonds, and other alternative investments. This diversification helps protect their wealth if one part of the economy suffers more than another. Another major advantage is access. The ultra-wealthy often have access to private investment opportunities that ordinary investors may never see. They can invest directly in private companies, participate in large deals, or work with professional teams that analyze opportunities around the clock. And perhaps the biggest advantage of all? Time. Billionaires often don't need to sell their investments tomorrow to pay their bills. That allows them to survive market volatility and wait for their investments to recover. History has shown that economic crises can destroy wealth, but they can also create some of the biggest opportunities for those who are prepared. The key lesson isn't that everyone should invest like a billionaire. It's that successful long-term investors often focus on fundamentals, maintain liquidity, diversify their assets, and avoid making emotional decisions during periods of extreme fear. Because when markets are driven by panic, the biggest fortunes are sometimes built by those who can stay calm. And while everyone else is asking, "How much did I lose?" the world's wealthiest investors may already be asking a very different question. What can I buy now that everyone else is afraid to own?